How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for June 26, 2018. Here's a snapshot of the positions being held by the institutions, the majors, and the US dollar. And so let's take a look at the data and see what we can see. So, in terms of gold, we have that drop in price that I've been expecting for quite some time. Dropping down into the weekly area of demand. Now remember, this weekly area of demand was created by the banks closing short positions, so it's not an area where the institutions are looking to accumulate a long position. Could we get a move to the upside? Sure, we could, but I think any move to the upside is going to be short-lived, and we're going to see an eventual break of this area and a push to the downside. So, taking a look at the positions held by the institutions, what can we see? We can see that over the last couple weeks, the institutions have been increasing their shorts. This is what I've been pointing out for the last 2-3 months with gold, that we're going to see a drop, and we're also going to see an increase in short positions. So that's what's happened. This week's data represents this candle here, this consolidation candle, right at this weekly ascending trend line. So as price was right at the weekly ascending trend line, boom! A big infusion of short positions causing price to break through that trend line and drop even lower on the charts. So sentiment is becoming more bearish, which is exactly what I was expecting to see. And excuse me, so because this area has already been tested, we could get a further test, meaning a test of this area here, and then a push up from here. But I believe eventually we're going to see this break and price is going to move even lower. Alright, let's take a look at oil and see what we see. We see longs increasing from 694,000 to 719,000 as price was rallying up here off of the weekly 20 EMA. So we see price was moving up, hitting the supply imbalance, profit taking on long positions here. We see a drop from that profit taking, and now we're starting to see them reaccumulate those long positions. So not as nearly as aggressive as it was back here, but starting to accumulate a long position again, nonetheless. So why are they doing that? I believe they were doing that because they are wanting to push price even higher. I think there's a very good chance that this weekly supply imbalance is going to be taken out, and with these numbers, 88% exposure to the long side and even cooler on short positions, I think there's a very good chance of that. Looking to open up a long position on oil and see if we can get a push up to this area up here on the oil. Alright, let's go to the US dollar. What do we see? So, not much, okay? In terms of positions being changed, we see that we have some big moves in gold and oil, but in terms of the rest of the currencies, we're going to see that not much has happened. And just as I reported in this last week's report, I believe a big reason for that is because of the contract expiration that happened the previous week. A lot of movement in the charts, so probably they weren't so keen on making such big moves this past week. But what we can see is a small increase in longs and a small increase in shorts, not really telling us anything, but the sentiment still somewhat of a bullish, right? A little bit more neutral here, bearish, becoming a little bit more bullish. And we can see we had a reaction from this area of weekly supply. And not much more to see here. Yes, they are bullish, but I think there's still a very good chance that we see a push to the downside from the data. Okay, so let's look. What do we see with the Aussie? Again, not much going on. Shorts are still aggressive, longs are cooled off. But in terms of position sizes, nothing's really shifted. And that came as price was consolidating here. I believe we're still going to get a drop like that. Let's see the next one. US CAD here was a big mover right here. Longs increase from 59,000 to 73,000, and that comes as price was testing this monthly area of supply. So we can see now that we got a reaction to the downside, but we got a closure of short positions from 45,000 to 40,000. So an increase in net positions from 14,000 to 32,000. This builds the case of a push to the upside. What I sense is going to happen, very good sense, is a push down to here, and then we're going to see a big move like that. Okay, but overall you could tell that the sentiment is bullish, so we are expecting a bigger move to the upside. Alright, US Swiss franc, we see a small increase in longs and a big decrease in shorts. Longs is still aggressive and bullish bias, as we are testing this weekly area of supply, expecting a bigger move to the upside and a break of that area. So the longs are holding strong and supporting the idea of a bigger move to the upside. US CAD the same thing, the dollar the same thing. So far painting the same picture when it comes to the US dollar pairs. Euro US dollar. So what do we see here? We see a slight decline in long positions and a slight increase in short positions. And that came as price was dipping down and then reversing back to the upside. So again, not much to see here. Long exposure increases by 1%, but that's not much to be able to judge a move that's going to be coming in the future. So we are still consolidating here on the monthly. I think there's a very good chance, as I've been saying, of a push to the upside, because I am not seeing a very strong increase in short positions. Yes, if you take a look here, short positions are becoming aggressive. It's like they are secretly accumulating a short position, because I am expecting a bigger move to the downside in the grand scheme of things. I think short term, I think we might get that push to the upside. Hard to say, and based on this last week's data, it's not really pointing in any specific direction right now. Pound US dollar, we see a small decline in long positions and a small decline in short positions. Net effect is long exposure drops from 42 to 40%. That came as price was consolidating here. This one's a messy chart, still expecting a move to the downside, but take a look. Coloration of the cells, they used to be somewhat bullish, now becoming a little bit more neutral. Okay, entering into more neutral territory. So not much in terms of positions being shifted or giving us any insight as to what is most likely going to take place. US dollar Japanese yen, we see a small decline in long positions as price was dropping from the tested area of weekly trend line. But if you take a look at the sentiment here, again, we used to be somewhat bearish, now coming into more of a neutral territory. Net positions are positive, in the positive 34,000, which is good, and it also is one of those clues that strengthen the move to the upside on the US dollar. But still need this to be taken out, and then a clear path to the upside. Kiwi dollar, what do we see? So longs are very cooled off. Shorts increased by about 2K. The sentiment is definitely bearish. Okay, we used to be at 44% short exposure. Now we're at 69%. Monthly area of supply and control. This weekly area of demand taken out. These numbers come as price was consolidating right before it took out this area of weekly demand. Clear sailing here. Okay, we need this one last weekly area of demand to be taken out. Once it's taken out, it's clear sailing to the downside. And that's pretty much it in terms of news coming out this week. We have, I think, just the Aussie rate statement, which was yesterday. They didn't change the rates. And the NFP coming out on Friday. Alright, that's it for this week's CFTC report. Hope you enjoyed it and hope you use it to give you some good trades this week.